Hello, everyone.
Hello there.
Ah,
Ian.
Hey Colin, how are you?
Not so bad.
Good morning.
All right. How are you doing?
Oh, there's a neat video. Sorry.
good. Oh, good. We've got some familiar voices on the line. This is great. So this is our first time using Zoom meetings, webinars. We're experimenting with the technology, so so bear with us on this. Thanks very much for joining.
Of course.
Okay, and let's give it just another minute for a couple more people to join.
Nobody's taking the call in from the beach or some resort location. So
I wish.
We're in our bedroom. So for those of you who don't know, Helina and I are husband and wife team. I'm the founder of Entreflow. I made Helina the CEO. So we're not actually breaking quarantine rules by being in proximity in the same room.
I didn't know that. So
Fun fact. And we also have two children who are with our nanny watching The Sound of Music in the other room. So if you hear some operatic do re mi singing going on, then that's what that is.
That's great.
Awesome. Hey guys.
Hey, how are you?
Is that Keith? Hi, Keith.
Hey.
Very nice to have you with us today.
Yeah, it's great to be here. Thanks for organizing this.
No worries. Yeah, we thought we would just put it out there. We're going to do this every Tuesday and Thursday. Tuesday a bit more finance focused and Thursday a bit more HR focused. I think those two topics are pretty hot at the moment. If people want to jump on, participate, answer questions, ask questions, what have you, then we're creating the space for it. And then we've prepared a little bit of content to share just to provide an update on what's been coming down the pipeline from the government and health ministers and what have you. Some top tips to survive the pandemic from a business perspective, and then a little topic and some Q&A time. So that's kind of our game plan for today. I don't know if we wanted to just jump in there then, Ian. And are we recording this as well? Then we can share it around after.
I believe Aislinn let us know. Give us a thumbs up, Aislinn. Yes?
Sorry? You kind of faded out for me.
Okay. I just wanted to know if we're recording, but it seems like it is recording.
Yep.
Okay, great. So there's the agenda. That's Helina.
That's me. I could do a quick brief. So I'm the CEO for Entreflow. I've been here about 4 years. I'm a CPA, CMA, and I've worked in industry for years prior to this in an HR function as well as a financial function, doing more analysis. So this is an exciting time for analysts, to be sure. And then Ian, if you want to introduce yourself as well, so jumping in is.
Oh yeah, it's not really about me. I mean, I'm an MBA. I've run a couple of businesses, mostly small, always scrappy, and I've worked in large corporate as well, mostly on the sales and business development side of things. Cool. And notable on the line is Keith. He agreed to join us and contribute some of his wisdom. Do you want to say hello, Keith?
Yeah, hey everybody. So Keith, I'm the co-founder and CEO of Spring. Spring exists to change the world through entrepreneurship. Proud to be a partner both of Entreflow as well as Startup Vancouver. We work a lot with entrepreneurs to guide them through kind of startup launch, early growth, fundraising, And Spring is my fourth business venture, and this happens to be my fourth recession. And so my hairline kind of proves that I've survived 4 recessions. So yeah, excited to answer any and all questions you guys may have.
Cool. Sounds good. Get us your little headshot, and we'll put you on the slide next time, Keith.
Sounds good.
You can put a fake wig on there if you wanted to.
Yeah, that's the great thing. Digital editing. We can be in Paris if we want to change our background.
Right.
Okay. So first, the news. So some of this is 2 days old, which makes it really old news at this point. Can you just run us through what's
for sure. So from a financial perspective, a couple of recent big updates for businesses. The CRA has basically deferred corporate tax payments to August 31st, 2020. This might change or shift as we go, but this is kind of where it's at the moment. The GST and the payroll taxes, we haven't heard much there aside from the wage subsidies that have come out. So for the time being, it's just the corporate tax payments that have to be deferred or are deferred if you would like to take that opportunity. The filings as well have been deferred. From the CRA wage subsidies perspective, so what the CRA is doing is basically allowing you to defer 10% of the, not pay, you're reducing your 10% of your payroll taxes. This is available to not-for-profits, registered charities, and then CCPCs with less than 15 million taxable credit. So in order to be a CCPC, you have to have 50% ownership for the most part in Canada. So it's not available to everybody. The best way to deal with the calculations for this one right now is to use a payroll application that has already sent their developers on a frenzy to work out the calculations on the back end, trying to sort this rather than trying to sort it out yourself. So I know in a bunch of them, WagePoint and Payment Evolution have already figured that piece out. So save yourself some time in those applications. And as well, the PST and employer tax.
The CRA. So regarding GST payable that might be owing, and any other CRA debts. I did speak with a CRA collections officer, and she was saying that they're putting a stay on any collections activities against businesses in this time. So I don't have an official announcement about that, but if that's something that's on your mind that you owe the CRA, then they're going to have some leniency in this period of time. I don't think that's going to mean an out-and-out forgiveness, but certainly you can go through the normal procedure of filing for a what do they call it? It's not a forgiveness. It's tax relief. That's right. So normal channels for that, and you'll have a little bit of extra time to do that. That's what I got informally.
Okay, great. Thank you for that. Insider information from the CRA. Great. Next, the BC PST filings, got a filing extension and a payment extension until September 30th. As well, the employer health tax has been put on hold for the time being, so no payments are due for that at this time. We're waiting for more information from the Premier on kind of what's going to happen there. As well, the federal government has mandated the BDC and the EDC to help to make it easier for businesses to access credit right now. As far as the number one question that comes up with this is, okay, how do I access this? From what we can see from the BDC's site right now is the best thing to do is to reach out to your financial institution. They, I think, are fielding the referrals over to the BDC and the EDC at this time. And we'll update as things change there. So good luck reaching out to your financial institution at this point, because I'm sure they're getting inundated. But that's, I think, the best first course of action to access that. I guess to take a pause, is there any questions on these recent news or any other updates that people have heard that they think are worth sharing at this time?
Yeah, I had one. With regards to small businesses or people that are also self-employed, I heard that you can apply for, I don't know if that passed today, if that had to go through, but you can get $900 every 2 weeks for the next X number of months. So there's something there as far as the equivalent of EI for people that are self-employed. Have you heard much about that, or even able to navigate how we go about applying for something like that?
I think they've just got a brief issue with their speaker that they're trying to figure out.
Did you hear me though? Yeah.
That I'm not sure of. I think it's just they had a little window that came up talking about their speaker.
Okay.
Can you hear us, guys?
There you go. Oh,
Can you hear
had it for a
us?
second. Yep.
Okay,
now.
okay.
Yeah, okay,
Sorry, we
great.
had a bit of a tech
Go
glitch
ahead.
there.
Sorry, can you repeat that, please, Colin?
Do you hear me? Okay. So I did hear a couple of days ago, and I don't know if this has got passed, what got pushed through today, what they're pushing through Parliament, but I heard there's the equivalent of EI for people that are self-employed, $900 every 2 weeks for X number of months. Is that something you know about? And if so, is there an easy one place to go to apply for that, or is that also through EI? There's been some kind of confusing communications on that.
It is very confusing, and so we're still digging into that ourselves on how to do that. So, do you, as the business owner, need to submit an ROE for yourself? Are you actually stopping working or not? And then also, so we're looking into that at the moment. What we have discovered though is if you are self-employed and applying for that EI at this time, and it's a corporation, you cannot, your dividends that you take out are going to offset an EI that you receive. So just to keep that in mind. But as far as the mechanism, we're still digging into that one at the moment. So we'll hope to have an update there.
Okay, I know that for some, also for me to communicate out there to our Startup Vancouver community, but also for me personally, yes, I'm a partner at a corporate entity, but I also have a sole proprietorship that I've had for years that I actually do work through, which of course now has dried up for the foreseeing future. So I was looking also for myself to perhaps be able to access that.
Yeah, certainly.
Yeah, what we're hearing is that you should be able to, but the fine print doesn't seem to have been released.
Okay.
So it's maybe prudent to start applying and then see where you get to and have some conversations. Just a little further on the dividends thing. So if you are employed at your corporation and paying yourself dividends, then your calculation of your income does include the dividends for EI purposes.
Mm-hmm.
So you can, your percentage of your income that EI is going to pay out can include any salary, wages, and dividends that you paid yourself over the last recent period.
Okay, thanks.
You know what would be interesting, guys? You've done a great job of giving us a summary of what is known today, and as we know, this is evolving, and you guys have done a good job in social as well as of kind of sharing updates as we go. So thank you for that. Part of the process that we see here is that there's things like tax deferrals or filing deferrals. What advice can you suggest to people? Because sometimes the deferral is a little bit out of sight, out of mind. And then it's almost like delaying the inevitable.
Yeah.
And which is like, yay, I get to do a tax deferral or health tax filing delays, etc., which is great. And it's super helpful. But what kind of advice would you give people in terms of like their financial planning for the rest of the year so that they don't get caught at the end of September with like, oops, and now I have to catch up on all this stuff? So what kind of tips and tricks would you guys give?
Well, we'll get to this in the later slides, but I have a section on cash flow forecasting. So thank you for preempting. That was not planned, by the way.
Yeah, that's not a planted question. I'm just saying.
But, at this point, I would say go ahead with doing the filing so that you know what your amount is going to be, right? If you're in a refund position, especially for individuals, well, go ahead and get that refund. That's obviously going to help you. For businesses, it's probably, I would personally want to just know how bad is bad, if it is going to be bad. And even a back of the envelope calculation at the very minimum, so that you aren't just leaving that till later. If you are doing installments at the moment and you put those on pause, just those are adding up, and that's going to affect you later. So I mean, it's a balance of making sure that you're keeping your business running and not suffering to keep the CRA alive, but also not surprising yourself later. So the cash flow forecasting, I think, is really, really important right now, just so that you can make informed decisions.
Yeah,
Great.
Thank
Let's
you.
get into that. Is there any news that we missed? Anyone else on the line had anything that they saw?
I think one thing that came up for the team was just in the US right now, I think there's a bit of focus on things reopening, and we seem to be the opposite on closing right now. There's been a lot of questions about this morning, Ontario announced what they deemed to be essential and non-essential industries, so far as what needs to close down right now. From what I gather from our premier in BC here, those are more drastic measures than he's really comfortable with at this time. So I'm not sure if that's going to trickle across the provinces or not. But if you take a look at the list that's out there, it's quite an exhaustive list. A lot of services still have to keep running. It's not like it's a ghost town over there right now. I think so that'll be interesting to see how that goes down the next week or so.
Okay. Yeah, and my comment would be, if we look at the history of where this virus has gone in other countries, one would assume, it would be safe to assume in BC that we would want to, anticipate similar measures to what has happened in Ontario and Quebec. I do believe that at the moment in the United States, they are overly optimistic about the ability to open things up again, which is fine. The one thing that I would say under recent news related to tax and other subsidies is that there are non-tax subsidies that are starting to emerge that organizations can benefit from, and and I think all of us should be willing to look outside. So, for example, Facebook announced $100 million to support up to 30,000 businesses, so an average of $3,300 per business. So if you do business on Facebook, that would be in effect a subsidy. Shopify has announced something in the last couple of days. And so there are several other examples. Anytime your business is leveraging a software platform to do your business, you should immediately, I think after this call, also go to those sites to find out where they're either offering things for free or they're offering other subsidies. Shopify, for example, has $100 million set aside as Shopify Capital for any e-com business that you can tap into as a loan. And so just a couple of other things to highlight, because all of this stuff ideally comes together to our benefit. And so I just wanted to highlight those things outside of these tax elements.
Yeah, for sure. No, that's super helpful. Okay.
This was my takeaway, was that there's funding, but the government won't be enough. So we have to make some shifts in our businesses.
And thank you for examples of other places to get funding there, Keith.
Yeah.
Again, not planned. Oh, you've got another.
Oh, okay.
Okay, cool. So some tips on managing cash, because this is, aside from managing your team at this point in time, managing cash is usually the next or first topic of concern. So planning is going to be your savior in all of this. So we recommend having a long-term cash flow forecast. So how are things going to go for the rest of the year? Best guess based on what you think is going to happen, and also a short-term cash. So for a lot of businesses, they're basically just focusing on the next couple of weeks and if they can make payroll and what that's going to look like, or the next couple of months. But it's also good to have in the back of your mind that long-term view as well. de-risk by seeking funding. So now might be a good time to get a little bit of extra cash around, even if you don't think you might need it, be it a long-term, a line of credit or a bank loan, any other extra kind of credit. As the saying goes, people are really happy to give you cash when you have cash and not so happy to give you cash when you don't have cash. So it's better to apply for those things sooner than later. Also look at potentially cutting expenses where possible. I mean, that's a short-term fix. It's not going to solve all problems, but I was talking to a client this week who they went through all of their software expenses, for instance, and found that they were able to shave about $750 a month in unused software expense licenses. So, hey, $750 ain't bad. Doesn't hurt to spend the time to do that now. I always recommend doing a couple scenarios with your cash flow forecasting, especially for the long-term forecasting. So, hey, if this turns around and we're business as usual, say, I don't know, June 1st versus August 1st, okay, what does that mean for our business and where are we going to run into some problems? And also, if you are looking for funding or some debt of some kind, they're going to want to know your burn rate here. And so it's good to have a couple of scenarios that you can show them that you kind of run the numbers and why you need the specific amount of money that you say you need. And then also communicate the plan. So make sure that everybody that needs to know the forecast is in the know. And for those people who have employees, it doesn't hurt to keep them in the know of this as well. A lot of them are going to be asking questions right now about, hey, is the company okay, or what's going to happen, or how's this going to affect me? And I think in times like this, transparency is the best policy. And knowing that you have a plan in place, you don't necessarily have to show them every little minute detail, but just knowing that there is a plan will often mitigate a lot of the anxiety that people will have.
I want to just elaborate a little bit on the short-term and long-term. So William on our team has helped a number of clients through crisis management before, and he always says that basically you need to be able to plan your cash to within $100 over the course of the next 2, 3, 4 weeks, so that you know exactly when those monthly charges are coming off your credit card. You know exactly when your payroll's coming out, and exactly how much it's going to be, because you don't want to forget. Oh yeah, I forgot about my rent expense or something, and then you have a surprise. In flush times, that sort of thing is okay about the timing of payments and stuff, because it works out in the wash, and you're really just looking at your P&L. And but when it comes to crisis management, you need to have a good planning tool, and you need to have a really solid understanding of what those recurring expenses are and upcoming things, and do it in a way that you can play around with it, right? So maybe you've got a supplier payment that you need to make, and you say you need to be able to go, well, what if I make that on Tuesday next week instead of Friday? Or you may have a customer that's trying to pay you, and you need to be able to think about, well, what if they pay me tomorrow, or what happens if they pay me on Wednesday next week, and how does that affect things, and how am I going to then communicate to my suppliers about what I can pay? So those sorts of things are really important, and feeds into the communication piece. And I think the other thing is the longer term, as Helina mentioned, and Keith, I think you were alluding to, is you can't just put this out of sight, out of mind. And when you're doing the longer term for the course of the next year or so, you'll be doing business model adjustments kind of stuff, versus when do I do the supplier payment. So that's the kind of difference in the short-term, long-term thinking. And again, tools are really important for this, and I think probably tell us a little bit. Yeah, so we'll hopefully be able to do that. You want to be able to update the forecast based on your actuals, right? And not have this be a really arduous thing to do every single month, to rebuild a 10,000 cell Excel model every month because you made some changes. You want to be able to be nimble with this, and then update that on how the actuals were. So those are my two sort of key pieces of advice there. Okay, any other sage advice from the crew on the line?
My only comment would be that I think it's really important to tackle it now.
Mm-hmm.
You know, it's and one of the reasons I say that is because, you know, it's human nature, right? Like when we are faced with a challenge that we've never faced before, the burning question is, how do I, right? How do I address this challenge? And so that tends to lead us to procrastinate. And so my encouragement is that if you've never done this before, create these two scenarios that you guys describe. And if you're stuck, ask. Like, just ask of anybody on this call, whether it's any of the individuals. I think the important part is to ask a question, and that's why we're here in this webinar, is to say, how do I create a scenario that makes sense? How do I make these changes as quickly as I can? Because the sooner you do this, the more breathing room you will have, the more runway you will have to not only survive, but then thrive. So that would be my objective kind of recommendation.
Can I just throw in a brief one? Just around rents and mortgages. So there's mortgage deferral on the personal side, so that's available. I think everybody's aware of that. And the other one I'm running into with some clients downtown is rents it isn't really figured out what's going to happen about rents. Some people's rents are pretty formidable if you're downtown, and I'm not quite sure how that's going to land at this point yet.
I did hear some rumors about, if we're talking about commercial rent. Yeah, I did hear something developing about there being some form of tax cuts or deferrals or something for people who hold property of a particular class. And then, so that is obviously to the benefit of the landlord. But then the idea is that they can then pass that on to their tenants.
Yeah, I mean, absolutely. I mean, whatever mechanism it is, it's got to be something for the landlord to allow the tenant to not pay for a month or two, right?
Yeah, very good. Could you mind writing that down, and then we can follow up on that thread? I think
where it's sticky for me is if you're downtown. I mean, some of these rents are just horrendous, right? I mean, they're scary, right?
Mm-hmm. Yeah. Okay, Helena's writing down that question. And then we'll follow up, because I do remember seeing something about it, so we can potentially share after that.
Oh, and then one other one. I tried phoning Service Canada. I had a little bit of business to do. Couldn't get through. Second to my phone. Sat on the phone for almost 2 hours. They must have a million calls, right? Service Canada is totally jammed.
Actually, one point I was going to make earlier was just with the another gotcha people might run into if there's any layoffs going on right now is the web ROE process. They're making some changes to how we're going to be able to file ROEs and some of the payroll apps as well. So that's one gotcha that people might run into if they do have to run into layoffs. It's just the web ROE process might have some updates there. Okay.
But before we move on, there's quite a few people on the call, so I've just put a couple people on mute. If you have a question and you're not able to unmute yourself, just put it in the chat, and then we'll get to it as they come up. Okay, and please bear with us, because I'm like I said, we're sort of new to the Zoom technology here.
This version of this.
Yeah.
Okay, so we had a couple of tips. So kind of piggybacking off what Keith had said about some other ways to get cash aside from the government. There's some private financing options that people might want to look into. And again, you want to get on these as quickly as possible. Time is kind of your best friend in raising. Hockey stick is a, how would you describe this app actually?
They're like the Canadian version of Crunchbase.
Right.
Let's put it that way. So they maintain a list of startups and high growth companies that are engaged in funding, seeking funding, and they have the opposite side of it as well. They have a list of angels and VCs and funds. So
they have a directory of VCs and other funds. So if raising is something that you're looking to do, then there's a good resource for you to reach out to.
They also list some of these ones that we're mentioning here. So like Fund Through is on their list, and BDC is on their list, and they have some details of it. It's a really great resource, and it's open sourced. So anyone can add to it if they've got a new thing, and hopefully it'll stay reasonably up to date.
And okay, next for private lending, Lending Loop and Lendified are two great options as far as getting quick loans. They have a couple of different models, both of them, and different requirements. So often recommend if someone's interested in pursuing one of them to look at maybe reaching out to both of them. Fund Through is kind of similar in that they will lend against outstanding AR. Not exactly like a, oh, hi, David. Saw your message there. Not like a typical fractioning kind of service, factoring service. That's it. Sorry, but a little bit more friendlier to the business owner. So check them out as well. So if you know somebody who's got a lot of outstanding AR, it might be a really good option right now. And they have quite a quick turnaround. All these three companies. Actually saw at a QuickBooks conference the three executives from each of these companies on a panel discussion. So that was quite interesting to hear how they are different, and they often work well together, where you can get support from two of the three of them in one kind of fell swoop. And then ClearBank as well is a cool option as well for people who have MRR. So if they have regular payments coming through via Stripe or PayPal or other kinds of services, basically ClearBank is able to get access to that, and on the basis of your payments that are coming through there, can lend against that basically. So some of those four options are quite quick and rather easy for application, so long as you meet the requirements.
Can I throw one in there? On the Lending Loop side, I mean Lending Loop a lot. I do some investing there. This is anecdotal information, but it's kind of slowed down a bit. I mean, they do fund, but they don't fund. They used to fund like just a few days, but they're taking a little bit longer to fund now. So just be aware of that. If you do go to Lending Loop, it might take you 2 weeks or something like that to get your money, right? Won't be in just a few days, I don't think.
Yes. Okay, good to know.
There's a question on the chat about, is there any news on IRAP or other early startup federal support? So I don't have any news on that.
Yeah.
I don't know that they've released any further funds or anything. Does anyone on the line have?
I haven't heard
any
anything
insight
from IRAP at this point.
Okay.
Yeah, I do. I have an IRAP advisor for one of the things that we're bringing to market. So I have received some emails from my advisor
Okay.
over the last couple of days with some news. To be honest, nothing's actually stuck out in my mind because I don't think it necessarily applies to us, but could apply to others. I'm more than happy to forward those to you to see if you can kind of pull any nuggets of wisdom out of that beyond my pay grade.
Sure.
If you'd like.
Happy
to forward those emails to you if you'd like me to.
That's great. Yeah, thank you, Colin.
Sounds
Cool.
good.
Okay.
Are you with Eric Cass?
No, I'm with a gentleman named Mirzad and with a woman named Alina now, who with what we're doing in the technology space in the sport realm. Yeah.
Awesome.
Okay, sounds good.
Yeah.
Okay. And Futurepreneurs as well. Yeah, good one, Keith. Futurepreneurs is really good for companies with less than 1 year of post-launch. So, and they're again very quick turnaround there too. Obviously, smaller loans for the most part, and they come with great mentors, like myself.
So one other thing that I was going to mention on this front, expect VCs and angels to be really quiet through now to the end of the summer.
Yeah.
It's interesting. I will tell you guys, given this is my fourth recession, I have had more chatter from investors in the first couple of weeks of this than ever before. I think part of that is because this is a medically induced recession. And so I think there's still a sense of opportunity and maybe pent up demand, but it's better to plan for, like, play the odds and assume they're going to be quiet. Yeah. I would encourage people, especially if you have a B2C product and you are in the market, then notionally the idea of doing a crowdfunding campaign could be a way to pull from the crowd, because we do see a lot of activity in social about people who are donating to causes and supporting each other. And so I actually think that this could be, and frankly, it actually is the first ever recession where we have the ability to actively do peer lending and peer support. And so I would encourage anybody who's B2C to consider that.
That's a really good idea. Well, thanks for that. Okay.
There was also a couple messages ago in the chat. David did mention something on the IRAP there. I don't know if you guys saw that one.
Yeah, okay. So that's right. And about BDC, yeah, the rules are they're restricting funding to startups with 2 years of revenue. Thank you for that, David.
Yeah, thanks for that, David.
Okay.
Cool. A couple of things. So just just BDC and talk to your bank, basically, which we've kind of talked about already today.
Yeah, expect bankers to be overwhelmed as well. You have to acknowledge that they're very traditionally working in an office, and a lot of them have been sent home, and only just, or maybe not even yet, getting connected with the bank's systems. They're very highly secure systems. So if you're with a commercial bank, they may not have even gotten your email, which is kind of annoying, but hopefully they'll be, it's not that they don't care, it's just that they haven't even got it yet. And so just be patient. They'll probably be answering requests in the next few days or next week.
Cool. Cash flow. So I thought we'd do a little bit of a deep dive before we go to our Q&A today on cash flow, a quick and dirty lesson. So I often get this question of what's the difference between a cash flow statement and cash flow forecast? Just to clear that piece up, a cash flow statement answers the question, where did all my cash go, or where did all my money go? It's a statement that is usually really easily accessible from your accounting software, and it's past looking. It shows the movements of cash and cash equivalents over a certain period. So we usually look at this as part of our financial statements, our balance sheet, or P&L on a monthly basis or quarterly basis, preferably monthly. And it highlights improvements to or opportunities to improve cash. So it's showing the movements within a period. Your cash flow forecast is looking at, based on your starting point is your bank balances, your spending habits, your recent spending habits. So those are those recurring expenses, your sales and expense predictions for that month. So it could be, your sales and your COGS related to those sales, or it could be any additional expenses that need to come up in that period. Your AR, your AP that you think you're going to be able to pay and collect during that period. And basically at the end of the day answers the question of how much money will I have in the bank at the end of the period. Okay. So one is, past looking, easy to generate based on actually what happens. The forecast is looking at kind of influence from what has happened in the past, forward looking, and a little bit more tricky to calculate. As I mentioned, the cash flow statement is, all accounting software will be able to generate a cash flow statement nice and easy. The cash flow forecast, it requires a little bit more work. So it requires additional software or or Excel to model something out. It requires that you're doing real-time bookkeeping, or at least have a really good tally on where things are at with your AP and AR. So a good reason to use, an awesome accounting suite and doing your bookkeeping on a regular basis, and also requires some level of sales forecasting. So there's obviously a number of gotchas that can come up in this, especially with this kind of unusual time that we're in right now, which is why I usually recommend to do a couple of scenarios. For tools, so heck, yes, we're at home, but that doesn't mean we've got lots of extra time to muck about with cash flow forecasting. So there's a couple of tools that we use to make this process a lot easier for people. So these are ones that we've used in the past. Short-term focused looking ones, Helm and Dry Run are both fabulous applications. They connect up to your QuickBooks and Xero and some other accounting software packages, and make it really easy because it'll pull in your bank balances, it'll pull in your AP and your AR. You can quickly work. Some of Helm will actually help to predict what those recurring expenses will be based on previous trends. So there's a bit of AI in there that'll help to do the legwork for you. And then you can obviously put in your projections and see how at the end of the day, how your cash will land. For that longer term forecast, we use an application called Giraffe. We use that for our budgeting as well as our forecasting. We do a 3-way forecast of P&L, balance sheet, and cash flow forecast. And so it's a bit more driver based and a bit heavier. So for those longer term forecasts and being able to really quickly do a bunch of different scenarios, that's a great application that we use. That.
I think just that these tools integrate with QuickBooks Online and Xero, and that's why those are listed in there. Mm-hmm. You don't have to have QuickBooks or Xero to use them, but it may make things easier when you go to roll this forward. So, you know, in the short term, this is something that you know, should be as close to live as possible. In the longer term one, this is something that you do probably monthly. You're going to set the plan. You're going to make adjustments to the plan. You're going to see how it went, and then make adjustments. And you don't want to rebuild it the whole way. So it's recommended to connect it up to QuickBooks or Xero. But if you just want to get started, you don't have to. You can just get going. So the costs for these things are minimal. There's I think Giraffe is $100 a month or something like that for their reasonable price. They have a higher end one. Both Helm and Dry Run are somewhere in the $25-30 a month, somewhere in there. US, these are US dollars numbers. So they're reasonable costs to do. If you don't want to spend anything at all, Entreflow has a cash flow forecasting spreadsheet that we've developed in-house, and well, I made it, so I think it's pretty cool. But
I started it just for the record because we were trying to find a cash flow app and couldn't find anything, so we started it.
Yeah,
we're ready to launch it, and then a bunch of cool apps came on the market, so we were like, okay, cool.
So I think
we do have one, yeah.
Yeah, I think we'll have to publish a link to that so that you can download your own copy of it.
We can add it to our page for the quarantine chats. We could just start adding some resources on there. Why don't we do that?
Yeah, that's a good idea. So, and again, that's not going to be hooked up or live, but it's something that you should be able to get in and play around with and get to some answers pretty quickly. And if you need help with this stuff, then let us know. Okay, cool. Anything else you wanted to say about these guys? Okay, so this is how to do it. These were my notes, so why don't I jump in and then you can expand on it. Okay, so this is really start by the understanding. So on the left, what are the drivers? So what drives cash expenditures? The biggest expenses, anything that you're doing that's oh, let's try this. Those are going to be the ones that you want to look at. You'll see very quickly what are the things that are the biggest line items on your P&L list, your income statement, let's say, and then you'll be able to drill into those. The next thing to do is look at what you can change. So for instance, your rent expense may not be changeable, but it may be one of the biggest items on your list. So you have to look at that and start to sort and prioritize this by the largest and most impactful things, and then what is the most changeable. So there may be things that you can change, but it'll take months to do. There may be some things that are easy to change, but will have very little impact. So you sort of have to sort and prioritize. And the what you can change part also looks at these business shifts. So Keith, you put in the chat about business opportunity because we were talking about security for mobile banking systems. So these remote banking staff are now working remotely. So it's important to note in this time, and we haven't even mentioned it yet, but there will be some businesses that thrive that do very well in this environment. And everyone's talking about Zoom. Zoom's doing very well because everyone's jumping online and having these online meetings. But they're not the only ones. You just have to they were already set up for this. They had a superpower that was just perfect for this scenario. If your business is going to thrive through this, you need to look for the ways to pivot and shift the business model so that you are serving the market in a new way, serving the new market, let's say. And that may mean that you need to change, the products or the service products that you're offering, and which particular segments of the market you're going after. So that's one thing. So this is it's a tricky one also, because we want to. There's a moral conundrum, right? We want to be able to help people out in the world. We don't want to think that we're profiteering off a crisis or a catastrophe. But at the same time, our businesses need to go on, need to support the people that are working in them, the staff, all the stakeholders, essentially. So it's this moral conundrum. How do we be successful in business while not feeling like we're profiteering off a thing, so off a crisis? And that's a difficult one. And I think there's a balance, right, in terms of, well, let's do activities that are giving back and supporting the community, and let's also look for opportunities that mean that we can survive and continue to do good things and support the community. So that's an interesting one, but you're going to be looking for things where business owners are making shifts in their business and how they are now working. So that may mean, let's say in our particular case, we're well set up to do all kinds of cloud accounting, 100% cloud for all your tax filings and such like. That's something that we were already doing, and now we can offer that as a service to people who maybe don't have access to an accountant that works that way. And that's just a small example, but I'm sure you can think of things for your own business. This may mean that you need to change people. So we've had a lot of people approaching us for layoffs and laying off people on their team. It may also mean that you need to hire people who have a different set of skills. And that's maybe a medium-term change. That's not going to be the right now thing. But we have to look at, okay, if I'm going to survive and say, now I'm going to switch, I was an events person, and now I'm going to switch to an online model. Well, who are the people that we need in our corner in order to make that successful? And then the third thing would be systems, and I think the obvious ones are, well, switching to online platforms like Zoom to have meetings. It may be just getting organized on say, CRM software, so that, because we're not all sitting in a room. So those are all the things. Okay, and I think I've waffled on a little bit about this, but all those things have impact on cash, right? And how you plan and how you make those changes. So think about those types of changes that you can change and how you do it. And then you'll construct a model, and at the end, it's going to spit out some answers for you. Well, the answers that you want to look for are not what's the bank balance, but what is the gross margin. So for every unit of service that I'm selling or every product that I'm selling, how much additional profit am I making on that? If you're selling a lot of stuff but not making much money off it, then that's going to affect your cash. Taking a look at things like your DSO is days sales outstanding. So this is, again, looking at your credit terms that you've got with your vendors, your suppliers. It might be inventory turnover ratio if you're an inventory heavy business. But these are all things that are going to affect your cash. If all your cash is soaked up in inventory, say, then that's going to be a problem. And then the last one is the current ratio. So current ratio is basically your ability to service your liabilities with your current assets, as in basically your cash and short-term like lines of credit and cash equivalents, let's say. So Sorry, I stated that wrong. Accountants are going to slap me on the wrist, but basically,
So what happens when people in marketing try to do finance chats?
yeah. But basically, it's how you can service your debts in the short, right? And so you want to make sure that you're looking at that and have a greater ability than normal to do this, because you need to expect further volatility. Okay, so those are things. Sorry for waffling on. Does anyone have anything else to add?
Any questions, Aaron? Thoughts?
I do have a company that is booming in the midst of this tragedy is food delivery, so commercial and consumer delivery of food. They're just going gangbusters.
Yeah.
We have a couple of clients some in the cannabis industry that are doing really well for obvious reasons. Some food industry as well are doing really well. Industries are doing really well. So it's kind of hit and miss.
Online learning is
doing really well.
Yeah, one thing to keep in mind, I think, for our own businesses, as well as for those people that we speak to and like advise or mentor, is some businesses are recession proof, right? So pocket luxuries, you mentioned cannabis, chocolate, actually revenue always goes up for chocolate during a recession. Things like food delivery businesses, they actually run the risk of a pendulum swing, because right now people have to get food delivery. And so they're going gangbusters, but when people can actually get out of their house and a recession is on, then suddenly food delivery becomes a luxury. And so they actually, the benefit they have is they can kind of plan ahead a little bit now. I think as we look to these changes, we should look to potential sectors and clients who are recession-proof or counter-cyclical. I think that those are really, really good opportunities. And then the other one is, to the point that you guys made, sometimes it's not about cutting expenses, but it's actually about reallocating investment. And so if you guys want, if you Google the distinction between how Staples and Office Depot approached the recession in 2001. And so what happened is Office Depot just kind of slashed expenses across the board. And Staples, what they did is they actually shut down a whole bunch of warehouses and the fixed cost, but they increased on their salary. They actually hired a bunch of people to focus on high-end customers. And they actually ended up outgrowing Office Depot by a factor of 3 during the recession and ended up winning the sector. And so it's a really good example of, it's not necessarily about just dropping expenses, but it's about reallocating those expenses in a way that actually allow you to take advantage of the opportunities. It's always about fair exchange of value, right? So long as that fair exchange of value exists, then you're in great shape.
Very cool. Yeah, I've just found an article about that I can post on the site as well, from Harvard Business Review. Cool. Awesome.
Very cool.
Coming up to the hour, and I had a couple more slides.
Okay. There are a couple of comments on the chat that I wanted to hang out. So I'll just paraphrase. So just noting that there will be an upswing and great opportunities that inevitably come after a downturn. And also the other one is about entrepreneurs being very optimistic. So the example was, an Italian team has designed a valve to reuse snorkel masks as respirators. So that's great.
That's very cool.
Maybe we'll find the link to that and post some more. Okay, carry on.
Okay, so really quickly, just a couple of things to think about if you need to solve problems with cash. So sales solves most problems is like Ian's favorite quote of the century, but it does help. So I've been telling a lot of our clients, don't slow down on sales right now. Think of other ways that you can reach out to people, how you can help. And if it is really slow, start thinking of building your lists or other things that you can launch once things pick up again, so that you're not coming back out of this with an empty funnel. You can pay your bills late if you really need to. That is a lever you can pull. Reduce your overhead expenses. You can close locations or offices wherever possible if you really need to reduce your rent expense there, and then temporary layoff if absolutely necessary. So there's some quick fixes in a crisis. On the longer term, again, sales solves most problems. You can look at negotiating better rates with your vendors. We just went through this process with a client where, once especially for inventory heavy companies, they often forget once they get to a certain volume, that it's a really good opportunity to go back and negotiate either better rates or better terms. So it's a good time to do that. It might be a case where you might need to find some better vendors as well if they're not willing to budge, or if you're in a situation where you have some vendors outside of the country and you can't get your goods, you might have to find some locally. Look for some partnership opportunities to reduce your cost risk, like thinking outside the box and see if maybe there's some people that you can buddy up with to do certain things. And it's never a bad time to look at your existing customer list and really evaluate the profitability of some of your customers. It's really easy for long tenured companies to get used to having customers that they support because they've supported for so long, even though it's not profitable. Now's the time to say, okay, well, it doesn't make sense for our company to be paying for them to get the service or the products that they need. So time to make the shift there. Okay, so that's all the content that we have for today, and I wanted to leave some time for some questions too, or any other sharing or thoughts that the rest of the group has. So if you want to, can you unmute all? Iain?
Yeah, I'm gonna unmute everybody. So let's see how this goes. We'll see if everyone talks over each other. But go ahead. Does anybody have any burning questions they wanted to ask? David, yeah, you've got one. Go ahead.
Bit of feedback there, David.
Not sure the mic is working there, David. Can you just type it into the, okay. Okay, so I'll just read it out. So ours is an enabling technology. We figured out the maths to put dollar value on the intrinsic nature of data. This converts data from an intangible to real assets with proxy cash value on the balance sheet. Our first application is managing data as if it is physical inventory, delivering business metrics such as data inventory churn and cost of data sold to data operations finance teams. This enables other electronics tech and markets. Our plan has been to serve B2B enterprises whilst opening our basic service to a worldwide community of developers, small businesses, and micro enterprises. But with COVID-19, wondering about flipping the game, creating Creative Commons open sourcing the IP, like what Ethereum did with its white paper. What do you think of this idea? Initial reaction is that sounds like a good idea. I would expect that so enterprise sales is typically a longer sales cycle, and it could be months or years before closing the sale. And this kind of thing creates a distraction which can bump the sales process for another few months, or even completely lose the thread, especially if there's a layoff of the key people you're talking to. So anything you can do to get to a smaller, shorter sale would be a good move to do right now. So that can mean, yeah, do some open source stuff and sell some consulting services on the side with it for people who are starting to use the technology and figuring out how to do it. That's maybe a good point.
A freemium model where it's free at certain levels, and then if you need to.
Yeah, there's another client of ours who has a software tool that they built. It's in the IPFS space. The core technology of that is open source and it's community available, but they've got an enterprise product available for that. So they sell consulting services and they have enterprise grade solution as well. So they've got both things going on. It's definitely a good idea.
Yeah, just to tap in on that, I would totally agree with what these guys just shared. Creating a tiered set of offerings where it's easier for people to sign up early in those early light consulting offerings, and then maybe having that enterprise grade offering to go along with whatever like subset you decide to open source. And then the other thing to keep in mind is that you were talking about creating this inventory of like data. And so it's like data inventory churn, cost of data sold. So fundamentally, it sounds to me like you have a product that can say one thing and one thing important now, which is save time, save money. So as people are cutting staff, save time, save money. So I would actually encourage that you find a company in your sales funnel that's closer And I would go to them either with like a deep discount or even free in exchange for a case study and testimonial that says save time, save money. So notice I don't say free. I say reduce cost, and fair exchange of value includes the case study and testimonial. Because then as everybody gets into the fall and really the teeth of the recession take hold, then you're like, hey, you need to cut costs. I can help you do that with our platform. So that's another potential strategy. You know, it's management discretion on which path you go, but I think you have two very clear options before you. So that's great.
Yeah, very
Cool.
cool.
Anyone else have a question they want to ask?
Suggestions, thoughts?
Yeah, I got a couple things. I guess the first is with Startup Vancouver. Happy to support what you're doing here on a weekly basis and any other type of events you're putting on. So if you, in the short term, however long this lasts, we are happy to collaborate with any and all. Keith, the same goes to you with Spring, any events that you have going on. I think, as you all know, we have a fairly mean team here, mostly of me, who started in Vancouver, which surprises most people, but it is the case. So it's about collaboration and the power of partnerships. So as we move forward, even with this and what you're doing here on a weekly basis, if you want to formalize that in a way that we can start to promote this more, to kind of amplify the signal, and even with the great kind of nuggets of wisdom you've provided here, I've always found is we know when you're pitching or you have an ask, always have one thing rather than a whole. I think with COVID-19, people are just getting overwhelmed with people wanting to help and giving links to things and this and that. Even what you put here, it gives a chance to distill down micro chunks of helpful information, even if it's just one tip. So you can actually have, 20 or 30 social media posts out of these of like one thing every single time, rather than 20 of them or go to here, because people get overwhelmed. So if that's something, if you want to wrap your heads around a little bit, that we can help amplify that signal. Of course, as you know, we're on all social media platforms. Our community is quite large already, and I've even found a bit of a bump already since in the last 10 days or so of more people jumping on board and looking to connect and communicate. So just to put that out there as we continue on with this, that to create our own events right now, we're taking what we have with startup drinks and startup stories. I think for now, it's too big of a beast right now to try to make that happen with the capacity that I have in our team. So for the short term, however long this lasts, again, with all of you out there, and I've talked to Paul at Volition and a few others, the same type of thing, to be able to, even if we're able to help in some way, or if we're able to promote it even more so as we go. So happy to put that out there for everybody.
That's great. Thank you very much, Colin.
Okay, and I know Startup Canada is the exact same way, to be able to start to amplify those on a national level. We're still working through our strategy on that. I will say with, I don't know if any of you had a chance to meet Kayla, who now is the managing director that's taken over from Victoria, and she's awesome. And the leadership she's shown already on our national calls is outstanding. So that we're in a good place there. So we have that opportunity then, not only locally but also nationally, to help everybody to kind of spread all these great things that we're doing.
Cool. That's great. Yeah, I mean, it's really just, we're just trying to be here to help however way we can. So the more we can get the word out of that is fabulous. And also participation too. It's great to have other people on the call to answer questions and provide some insight and what have you, because our collective intelligence will help us through this more than one person's ideas. So
yeah, and to help entrepreneurs, as we all know, that entrepreneurship is tenuous,
it's hard enough,
agile, and isolated enough already. And even ourselves with our business, and most of you don't know what we've been working on. I know Keith has been following our journey the last couple of years, and he doesn't even know what we're actually bringing to market, which is technology based in the sport realm. But I've been working with clients, potential clients, for product fit to bring it to market with Cineplex and Playland and the PNE and PGA golf tournaments. And right now, of course, those aren't going to be clients for the short term. So that idea now is like, well, do we just give up, or what do we do, even though we've actually built our awesome prototype and figured out some of the technology. And now we're taking the opportunity to actually move that forward. It's like, let's focus on that while we do some other things too, to actually generate recurring revenue to keep things going. But now our team has that opportunity to do that. And we're going to go in the New Ventures BC competition again, if nothing else, just for practice and awareness, just to kind of put that out there. For the second year with this, which we did last year without even any technology. And we actually made the second round, which is kind of cheeky and pretty amazing, but there you go. But just for everybody, seeing the example that we have here, rather than just throwing your hands up in the air and going, oh, geez, you know, we just need to give up. These things will come back. They will come back in a different way. I have a feeling also, you can't put a time on it, but it's almost like a hose, a garden hose that we've kind of held like this right now. Eventually it will be released and there will be this pent up demand of humanity to want to connect with each other when we can. And that may take a while, but it will come back. So we want to be in that position with what we have. We know there's a market for it. We know as now we will have to work through. And with Entreflow, I probably need to work with you guys if that you want to take us on as a client. We're definitely looking at that to get those pieces right as far as our cash flow and our statements and our forecasting also. So once again, so that's us on a personal level, but also with Startup Vancouver, we're here to help and we're here to actually connect the community even more so than we've done in the past. Okay.
Very cool. Awesome.
Sounds really good. We're over time, and I think that's a really great sentiment to finish on as well. Let's wrap it up here. I believe the session has been recorded. We'll review the recording, make sure that it did go through.
Our technical problem.
Yeah, there were a couple of follow-up questions and links to post. So we'll get those all uploaded somehow onto some publicly available thing, which we haven't figured out yet. And then we'll share them out over all the usual social media channels. Last thing is just to say thank you. Yeah, thank you very much, everybody, for joining us. And hope it's helpful. And please share because we're hoping that we can help lots more people too.
So the next one this week is on Thursday, same bat time, same bat place. And will be more of an HR focus. So the Tuesdays is more finance focus, and HR is Thursdays is HR focus. So Bronwyn will be joining me on Thursday to nerd it up on layoffs and all that other fun stuff, but also the positives to how to leverage the working remotely scenario and keep your culture growing and flourishing through that fun. So see you guys then. Thank you so much for joining us.
Thursday.
Bye.
Bye, everyone.